Good morning, traders and investors. It's Friday, December 12th. A busy day today. Lots of good stuff going on in this weekend. This morning, I'll be on Schwab TV on Trading 360 show if you happen to watch it. This afternoon, I'll be working on my invention. Got some parts in. Very excited. Got some new machines and tools as well so I can machine out better parts. And this weekend is a full-on family ski weekend. The resorts are open, our club's open. So very excited for that. And also, on another side note, somebody sent me a very nice gift and bottle of wine from British Columbia. Alexander, I have searched high and low. I don't know who you are. So send me a message. I got it, and I will probably enjoy it by the fire this weekend. So thank you very much. All right, well, let's dive into the charts. Lots going on when we take a look at the markets. One of the members wanted to talk about AVGO last night, which we'll bring up because it actually had a movement in overnight trading. We saw Broadcom, which got hit pretty hard. It had a big pop earlier after the close, and then it got hammered. And actually, it's not too bad considering the closing price. It's really only down about 6%. But again, another potential warning that the AI space is coming to an end. The bubble is losing momentum. Maybe people are getting all the chips they need for their businesses and services for this initial wave. Who knows? But Broadcom, more or less today, is hitting the market. Yesterday was Oracle. So lots of pain on the street in terms of that. When we look at the Magnificent Seven as a whole, which used to drag the stock market up, the Magnificent Seven has been trading sideways. Money has been flowing into more or less microcap stocks, which we can see rocketing higher. IWM, which is the small cap stocks, has been moving higher. If we take a look at the Dow, the industrials, they have been popping and moving higher. And then, of course, the precious metal space, which we can take a look at GLTR, which is a basket of gold, silver, platinum, and palladium. And it has been moving up and to the right as well. So that's where the money seems to be going. The Magnificent Seven running out of steam. The big players there swinging and missing on their guidance and their expectations for sales, which is what we've talked about many times in the past. When we go and we look at these cycles in the market, when we take a look at these cycles here, we always talk about how the stock market will top first before the economy. And that is because people start to see projected forecasts not being as high as they thought, or starting to get trimmed back and lowered or not met. And so as that starts to happen, the market starts to sell stocks and they start to go down. And then all of the data points actually come to fruition and people start missing numbers and downgrading even more. And then the economy is technically in a slide. But right now, we're still in this topping phase. Metals are on fire. Energy stocks are still doing very well and holding up. Capital good companies have had killer earnings because all the CEOs and production managers have been upgrading facilities, thinking this is just a pause and their business is strong. I do think the music's going to stop. And of course, we're going to see a lot of pain on the street once all this kind of eventually plays out. Now, let's take a look at what's going on in the markets today. We do have, let's look at the NASDAQ. The NASDAQ is selling off a little bit. You can see we have, I think, the futures contract rollover. So it shows it opening higher. I'm going to use the QQQ and the 1440-minute chart just to get E signal to show what is similar to the daily chart. More or less, the market is selling down a little bit because of Broadcom and a little bit more fear in the market. Now, the market's been hit with some data. We had a quarter basis point cut. We had Oracle. We've now got Broadcom. I wouldn't be surprised if we see a little bit of selling at the open again today. Now, yesterday we saw the very similar type of price action if we were to just look over at the market. So we had Oracle come out with bad news and the market got hammered in overnight trading, and then it drifted and regained most of it before the opening bell. But again, after hours in pre-market, most people can't trade. So when there's a huge emotional move like that, it moves very quickly, but it's a very, very tiny percentage of people that can actually take advantage of those moves or who can even trade them. And then when the markets open at 9:30, all of this fear, that pent-up fear, hit the market where everyone just has their market orders and they all just want to dump their shares and get out at the open. And we saw that huge wave of emotional kind of fear selling, just broad market participant. And then eventually it stabilized, and then the market ended up closing very strong and moving up even in overnight trading last night. So I think we could see something similar. Broadcom has pulled the market down just like it did with Oracle. And then we could see a little bit of selling this morning. But overall, the market is pretty resilient. We've been hit twice with some news. I mean, when you look at the QQQ here, it is definitely trading sideways. There's lots of noise. This is a pretty noisy chart. Lots of volatility. The longer something trades sideways, usually the more potential energy it has. It's coiling sideways. It has when it starts to go break to whichever direction it's going to go, ideally to the upside. So let's just see, because we are in this holiday rally seasonality-wise. The NASDAQ is down the most, 0.5% this morning. S&P 500 slightly negative. And then the rest of the markets, the Dow and the Russell, are positive because they're not quite as hammered with the big tech companies. Now, let's take a look at utilities, just because we haven't looked at them in a little bit. Utilities are finding some support at the 150-day. They have been hit pretty hard. They've moved down, had a pause, continued to move down. Now, I'm not sure where the measured move is for this. Let's just grab this move. So pretty much we've seen the utility space hit its measured move here. If we take a look at it, moved down, it had the bounce up, the bear flag, and now it's hit this next level, which also coincides with right through the middle of all this noise, this last kind of bull flag pattern. So I think utilities are trying to find a base, and I think as the market starts to get a little bit more nervous, we might start to see this come back to life. But again, right now it's just a little bit of a bounce at support. It's a technical bounce, nothing more than that. Now, if we go and take a look at the dollar index, it's up a little bit this morning, but obviously interest rate cut is taking the wind out of the sails, it's pulling back. It's settling down into the 150-day and into this previous consolidation. Again, news-driven move. It's just unwinding, and people are starting to get pretty nervous about the falling dollar, and that's usually a good sign. When people start to get nervous and we get a lot of chatter about it and concerns, usually it's about to find a bottom, and that's ideally what we'd like to find. Now, money's definitely flowing into precious metals still, and I believe we still have a ways to go. Gold up 1.34% this morning, picking up speed. Again, we got a $5,100, $5,200 target on gold. That hasn't changed in really about a month and a half. All of that is just starting to unfold and play out. If we take a look at silver, it's already really broken to new highs and continues to extend and push higher. It's up 0.4%. We're looking for $68 an ounce for silver, and I think it can still go quite a bit higher after that, but that's our first Fibonacci target. If we go take a look at platinum and palladium, platinum up 4.2%, popping and extending to the upside this morning, and palladium up 2.33%. All of this is what we've been talking about for the last, couple of years, the upside movement. You don't want to fight this trend, and who knows where the top is going to be. Things are getting into no man's land, all-time highs. So you really just have to map it out. One little bull flag, one little Fibonacci extension at a time, and just continue to ride these trends. Now, we're long the precious metal space, or I'm long the precious metal space with physical metals, gold and silver. One of our strategies, we are long SIL or SLV, we're long silver, really just taking advantage of this market moving up, and I do think we'll probably see it max out in early 2026, and the stock market will probably also put in a significant high, as I talked about yesterday in the video. If we go take a look at energies, we got natural gas down 0.7%, continues to just be in free fall mode, cannot find a bid. It is unwinding down almost 25%, which is typical for natural gas. If we just zoom back on the charts for natural gas, all of these moves are crazy big. Let's get rid of these insanely big moves and let's just go back to these ones. If you look at all these moves, you'll notice a lot of times these pullbacks are 36%, 53%, 15%. So all of these moves are massive, and that is the way natural gas moves. That is why it's called the Widowmaker. I stopped trading it a long time ago because it is very random. It has huge moves, but it also has big sell-offs. It has a lot of fake outs and shakeouts. So you can't trust these moves in most cases. And I just kind of gave up on it. I'm not a big fan of, I don't like flipping a coin and knowing it's either going to work really well or it's going to hurt really bad. So I really just move away from natural gas. I haven't traded it in years, although I used to trade it all the time. It's funny, I used to trade natural gas all the time, and I pretty much only traded the diamonds, the Dow. And now I never look at the Dow. I could care less. I really focus on the S&P 500 and the NASDAQ for reasons I have a much bigger depth of the market with those and can get a gauge on things. Now, taking a look at crude oil, we got crude oil working its way back down to this 50, 55, 56 level, trying to see if it's going to find support. Again, if it breaks this, I think we're going to see kind of a big bout of selling down to 50 and potentially into the mid 40s. So it's definitely struggling. But we are seeing the energy, oil move down, natural gas move down. If we take a look at some of these energy stocks, we look at XLE, for example, it's continuing to move higher. It's continuing to push up and hold its ground. There's some weird price spike on there. But again, it's holding up near the highs, and that's typically what happens with energy stocks when we're in the late stages. We got wars going on. Energy stocks tend to hold up fairly well. If we look at OIH, which are the oil holders, they have a nice bullish chart pattern as well. If we take a look, they're moving up, had a pullback. They got a tight momentum pattern looking ready to pop and move up as well. Now, other than that, that's kind of about it. We'll just let this market work itself out. We'll take it one bar at a time, and that's it. We've got our positions in place, and we're just letting the market unfold as expected. Take care. Bye-bye.